Welcome back to the Dividend Diplomats YouTube channel. You know you're rolling with Bert and Lanny, the Dividend Diplomats. And
it's a very comfortable sweatshirt.
It's very nice. Check out the store below. But we're talking to you about a steep, undervalued dividend stock right now to buy. Bert's been watching. He's even acquired shares this year. But this stock is at a level that I haven't seen in a very long time.
Yeah, it's now yielding 3.25%. It's insane for a company in this sector. So we're amped up to talk about it, see if we're gonna buy more, you're gonna buy more, and what the heck is going on with this company. But before we do, everyone please smash that subscribe button. Give this video a thumbs up. Help us get to 300 likes.
Let's go.
Well, yeah, you know what, Lanny?
Let's do it.
Let's leave a cliffhanger at the end. If we get to 300 likes on this video.
If we get to 400 likes on this video, I will buy at least 5 shares of
That's
this
where I was going
stock.
with it. Let's put something to it. Fine. I said 300, you said 400. We'll each buy 5 shares of the stock if we get to 400 likes on this video. You heard it here, everybody.
All right, guys. So what happened this last week in the stock market? The S&P 500 actually crashed below 4,400. They actually finished the week on February 18th, which is, we're recording this on February 19th, but they finished at $4,348.87. They were down, a little bit during the week, right, Bert?
Yeah, that's absolutely right. It was down 1.44% throughout the week. Year to date, the market's down 9.33%, off from that 4,800 starting point at the beginning of January. Man, the market just can't catch a break right now. Can't break through. Some days are great, some days are bad, but it feels like it's stagnating at the moment.
Well, what you're dealing right now, the Fed's going to be increasing interest rates. March is going to be very insane between now and the middle of March when they meet next. You've got obviously record-breaking inflation, and then on top of that, guess what else is happening?
Some political issues here. You got Russia, you've got Ukraine. Nobody knows what's going to happen with the price of oil right now because every day there's new news that impacts and causes the markets to swing.
And then you have a lot of crypto that's happening right now. The SEC reached a deal with BlockFi to pay upwards of, I think it was around $100 million in a settlement. Obviously, so crypto is going through quite a bit right now.
Yeah.
Bitcoin is actually below 40,000, which we haven't seen in quite a while.
Yeah, Ethereum is below 27,500. So it's a lot of interesting things in the market. But the good news is, with all this noise, it's creating some great opportunities to buy undervalued dividend growth stocks. This is time where Lanny and I and other long-term investors get excited because it gives us a chance to pounce on some potential sales that we haven't seen in a while and build those long-term assets, grow that passive income stream, because that's how we're going to achieve financial freedom together.
It's all about buying assets that produce passive income, and that's what we're here to talk about today. We're going to dive in to the biggest chip maker, the company that's ready to make a $20 billion chip factory here in the state of Ohio. OH, Bert?
I-O.
And we're talking about what company?
Pepsi, Frito-Lay, right?
Almost those kind of
wrong chips, Lanny.
Yeah,
we're talking the wrong chips
the
here.
Chips that are
in the computers.
Actually,
come on.
We do have that chip in here too.
We do. Okay, we've just been kidding. We're talking Intel, ticker symbol INTC. Man, Lanny, this is going to be a fun one. We've been talking about Intel for a while now, and like the market, the stock just kind of keeps sliding right now. It started the year well above 50. It's well off its 52-week highs. Well, in the 60s is where the 52-week high was?
Yep. The 52-week high was at $68. So they're actually down $23 from that 52-week high, plummeted all the way down to $45.04, pretty much just above that 52-week low, which is at $44.51. And what happened was in their guidance. They are saying that there's a delay possibly in one of their big server chips that was supposed to happen in 2023.
Yeah, that's causing some issues on forward guidance. There are also some potential news that maybe the PC boom that was driving a lot of Intel's success and a lot of the other tech companies over the last few years might be slowing down a little bit. That's a factor of it. They're also dealing with supply chain issues like every other tech company and many other companies outside of the technology sector. So there are some short-term headwinds here for Intel that are serious, that are driving down the stock price.
Yep, and on top of that, they have a very big heavy spend right now with their CapEx, or capital expenditures. Ohio is an example. Arizona is another example that they'll be building a chip factory. So you're talking 20 billions and again, billions upon billions of dollars being invested which then will kind of put some compression on profits for Intel, which is why they also expect modest revenue growth for the next 2 to 3 years. And they're really saying by 2025, they should expect double-digit growth after that.
Yeah, I mean, you're not spinning up a $20 billion plant in 3 months and getting it fully operational. It's going to take time to build it. It's going to take time to hire people, get the thing rolling. So yeah, short term, it's going to have some pain, but in the long term, they're taking the expensive steps needed to get back to double-digit growth, like you said.
So guys, we're going to run the Intel company, ticker symbol INTC, through the trusted Dividend Diplomat stock screener, focused on 3 beautiful dividend metrics: the price to earnings ratio less than the S&P 500, the dividend payout ratio less than
60%.
What's that perfect spot?
40 to 60.
And what's that last dividend metric we look at?
The dividend growth history, where we look at the 5-year average dividend growth rate and how long a company has been increasing a dividend. But wait, there's more, Lanny.
What's that?
What's our bonus metric that we look at after the first 3?
Tell it, Bert.
All right. It's that old nasty dividend yield here for that bonus metric.
There it is. We'll look at the dividend yield. Obviously, it's the cherry on top. So let's get in here. Intel is down right now over 15% year to date, down almost 30% since mid-February last year. They're trading at $45.04, pretty much at the 52-week low. To get into that first metric B, we're looking at the price to earnings ratio. Analysts still expect $3.73 from this good old legacy chip maker, which equates out to a price to earnings ratio of just 12 times earnings.
So for comparison's sake, the S&P 500 right now is about 24 to 25x. So yeah, it's less than half the PE ratio of the S&P 500. Fantastic.
Not too shabby. So Bert, what's that second metric look like, that dividend payout ratio?
All right, their annual dividend is $1.46. Divided by the $3.73. That gives you a payout ratio of 39.14%, just a hair below our perfect payout ratio range. But you know what, I actually don't mind it that it's a little bit lower because of all the spending that's going to be happening as they continue to build out these plans and some of the other spend needed to catch up in the sector. You're probably going to see a lower payout ratio. You're not going to see them start jacking up that dividend to increase that payout ratio. Now's not the time for that.
All right, to get into that third dividend metric, that dividend growth rate, guys. Intel has been growing their dividend consistently for 7+ years. They're becoming a dividend growth stock. They had 1 or 2 little bumps, way back in the early parts of the 2010s, but really they have grown the dividend consistently over the last 10 to 20 years. And they actually just recently announced an increase of about 5% this year for Intel. So the shareholders are getting rewarded here from that dividend payout. That dividend growth is there at or around inflation, obviously. We'll have to see what they really do in the next 2 or 3 years. I expect lower dividend growth, in the next 3 to 5 years, but their 5-year growth rate is at 6.25% currently.
Yeah, and I think that dividend increase of still 5% is very important, and in particular because of the timing of that announcement. They announced it in accordance with their earnings release, where they announced some of these headwinds, some of the future strains that are going to be facing. So despite the headwinds, despite the slightly slower revenue growth in the short term, some of the CapEx, they're still feeling comfortable enough to increase that dividend by 5%.
There you have it. So Bert, dividend investors care about that dividend income, that passive income stream. And how you know how much you're going to get paid is looking at the dividend yield. So what does that dividend yield look like for the chip maker?
Not 1%, not 2%, not 3%, but 3.24% right now. How many tech companies right now are showing a yield of 3.2% or higher?
Probably IBM.
Yeah, IBM is one of them. We own them, so we're cornering the market on those 3% yield plus tech companies. But in all seriousness, fantastic dividend yield for a tech company.
Exactly, guys. So there you have it. To summarize the metrics, again for Intel, ticker symbol INTC on Intel stock here. Price to earnings of 12. Payout ratio of just under 40%. Dividend growth at 6.25% on average the last 5 years. Dividend yield now is at 3.25%. And again, this stock is down 15%. Is Intel a stock to buy?
Well, so we've already committed 400 likes. We're each buying 5 shares of Intel, and we will make sure to follow the Twitter feed so you can see our purchases. So let's take that challenge and those purchases out of there. I am still loving Intel at these metrics. I bought them last week. I bought 5 shares at just under $48 a share. I haven't grabbed them at this price yet, but even outside of those 5 extra shares, there's no reason why I wouldn't continue to grab 5 more at 45
Get
right
5
now.
more, guys. Smash that like button to see Bert grab 5 more. I'll grab 5 too. You know, at these prices, $45 and below, I will grab 5.
Yeah.
I currently have 157 shares of Intel in my portfolio, but hey, if a stock is undervalued, is generating a good dividend, that's growing their dividend as an income investor, again, price appreciation, great. Not what I'm in it for. I'm in it for that dividend income and that income stream to grow.
I think that's absolutely right, Lanny. That's why you buy a stock in the past, you buy them in the long term, but it's also important to continue monitoring their metrics today, because even though you may see your initial investment increase significantly, they still can be undervalued, and you can still keep adding to that position. Even though the share price is higher from where you initially bought it, you can keep adding to it at levels that are still undervalued and increase your position.
So what are you guys doing? Are you buying Intel stock? Is this a dividend stock to buy right now at these stock prices? What other stocks are you buying here to close out February 2022?
And if you haven't already, everybody, smash that subscribe button. Give this video a like. Remember, 400 likes on this video, we each buy 5 shares of Intel. That's the challenge.
Guys, we appreciate you stopping by. This has been awesome. That was Bert the Hurt and Laney from the Dividend Diplomats.
Over and out.